Mike, so many things come together in this conversation, I suppose. It's what the Fed does, it's the dollar, it's inflation expectations. Where do you see, given all of that, where do you see gold heading?
I think that a small allocation to gold as a hedge makes sense at the moment because historically there's been a relatively strong inverse correlation between US 10-year real Treasury yields and gold, right? So obviously, real yields are pretty low at the moment. How could you get real yields further into negative territory if nominal yields are constrained by some combination of QE and financial repression, and then you get fiscal stimulus funded by that QE, which drives inflation higher in the medium term? Now, so that kind of central bank funded fiscal stimulus that's successful in driving real yields further down, I think would be supportive of gold. The challenge to gold would be if that stimulus doesn't turn into inflation, and in fact you end up with a deflationary environment, which would push real yields up. Or if you get a very positive scenario for the economy where we get a smooth reopening and hence nominal yields and with it real yields rise. So either scenario, very good for the economy or very bad, that led to a rise in real yields would be negative for gold, whereas my base case scenario would be fiscal stimulus funded by QE driving real yields further down and supportive of gold.
Do you expect any inflation to come about? I mean, I get email a lot from viewers who note that Campbell's soup now comes in smaller quantities with a bigger price tag, but inflation in general hasn't moved an inch, right? So do you see that really, that central bank dream coming true?
I think not in the near term, but I think in the medium term there is a risk of it. Ultimately, the governments are going to be faced with relatively elevated unemployment levels, particularly in the US, I think, for some time. And that probably weighs on inflation and makes it hard to get inflation too high. But I think the policy response to that should be infrastructure programs, fiscal stimulus to try and prop up economic growth in the face of that challenge. And so the risk is that over the medium to long term, once output gaps have closed again, and remember there will be a supply response as well, once output gaps have closed, if that fiscal stimulus continues, then you could see a pickup in inflation. But I think gold at the moment is simply a call on, do you think that you're going to get deflation or inflation? And if you're more positive that central banks will do everything in their armory in combination with governments to lean towards inflation rather than deflation, then I think that argues for at least a small holding in gold.